Well, let's just get right into it. What are your top picks heading into next year?
Well, I mean, we're at an interesting time. We're super positive here at Deutsche Bank on the fundamental kind of supply and demand picture. You know, U.S. consumers' household net worth is over $140 trillion. Non-mortgage debt as a percentage of net worth is at levels we haven't seen since 1965. So the demand picture couldn't be more positive, and in that context, there's a lot of investment opportunities. The problem that we see, and we published this in our 2022 Outlook report, the problem is multiples. You know, when we have high inflation and higher interest rates, it's almost always a negative for equity valuations, and it's through that lens in which we're being a little bit more selective in our stock selection. So specifically for top picks, the two ones I would highlight are XPO Logistics and Knight Transportation, KNX. KNX in particular is the largest trucking company in the country. And these two companies have the biggest potential for narrative change, where we're not too worried about the multiple compression risk that's brought on effectively by inflation and higher interest rates.
Just to flip that on its head, where are you most worried about multiple compression? Where do you see kind of the biggest risk to the downside?
Well, it's undeniable that, you know, the transport sector has actually enjoyed a very strong run over the last 4 or 5 years, and that's really been the call that we've had for the last several years. But in that context, the sector as a whole is not overly expensive relative to the S&P 500. So there's not a lot of clear indicators of where we're most concerned. However, if you're sticking with that narrative change, a company like C.H. Robinson, which is the largest truck brokerage company in the country, an incredibly high return company, but what COVID has done is accelerated the customer adoption of digital freight brokers, which really poses a risk to C.H. Robinson. So I would say C.H. Robinson, from a narrative change perspective, is a little bit more concerning to us, given all the traction that these digital startup freight brokerage companies have actually had in the COVID environment.
Oh, interesting. I'm curious what your channel checks reveal with regard to staffing and labor issues that have struck all sectors across the economy, it feels like, with regard to this latest Omicron variant. Trucking and logistics have had a hard time staffing pretty much all year for the last several years. Are you seeing this really affect their ability to meet demand?
Well, you have to look at it from a different perspective, if I could. I would say that, you know, people and labor are a proxy for capacity. And so in freight transportation, when capacity goes down, pricing goes up. And you've really seen, we at Deutsche Bank published a few months ago this term calling, we're currently in the golden age of transports, largely because labor challenges are allowing companies to reprice their book of business at a rate that we've never seen before. And so it's not just labor shortages associated with COVID, which are obviously very unfortunate, but it's also the U.S. government instituted a alcohol clearinghouse, alcohol and substance use clearinghouse about 18 months ago, which has taken out a lot of potential drivers from the pool due to, you know, some issues with respect to the clearinghouse. And so what we've seen is that there's 70,000 drivers that are reduced in their pool of drivers that are available that exacerbate this problem that we're seeing with COVID on labor.
Interesting. Ahmed, thank you very much for sharing that perspective with us. Appreciate it.